2023 retirement plan contribution limits just announced. It's a big change. Should it change your financial plan? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Every single year, the IRS announces what your contribution limits are for 401k, 403b, IRA, Roth IRA, all that sort of stuff for the next year. And oftentimes it doesn't increase that much. But with white hot inflation comes meaningful increases in what you're able to contribute to retirement plans next year. Actually, a record increase in how much you're able to contribute to the 401k, 403b. Let's get into those limits and then let's talk about how this could influence your financial plan. All right, take a look at this chart. For the 401k, 403b, your contribution limits are increasing by $2,000. So in 2022, the contribution limit was up to 100% of what you earned at that job, but not to exceed $20,500. It's increasing $2,000 for 2023, $22,500. That's a lot. That is a lot, guys, and you can call me old school, but I remember when that was 15 grand, 16 grand. It's $22,500 for 2023. Now, the catch-up contribution has been staying the same over the past couple of years. It's increasing. That's getting a boost as well, going from $6,500 to $7,500. So get this, if you're age 50 or older or turning age 50 in 2023, you can contribute 30 grand. $30,000 to your 401k, to your 403b, something like that. So instantly I look and say, well, how should this impact your financial plan if you've got the means to do so and you're managing your cash flow and all that sort of stuff and you're turning age 50 next year? Make sure you increase your contribution percentage so that you're capturing this entire amount. Second, if you automatically, as part of your plan, as part of your overall tax shelter strategy, wanting to contribute the maximum each and every year, this might be a big enough increase that if you were contributing, say, 15% or 16% or 12%, if you were already hitting your maximum, a lot of people have it where they hit the maximum contribution limit in October or November, something like that. This increase might be big enough where you're not automatically going to maximize your contribution for next year. So update your numbers, do the math, and if you need to increase your contribution for next year so that you hit this $22,500 limit if you're under age 50 or $30,000 limit if you're age 50 or older, update your contribution percentage so you don't skip a beat. Also, honorable mention, if you have a simple IRA, and many employers are shifting from simple IRAs to 401ks because of the multi-employer plan and all the benefits that has. So, gosh, if that's you, if you own a small business and you've got a decent number of employees and you've had a simple, reach out to your retirement plan specialist or reach out to a member of our team. We can help compare and contrast whether the simple still makes sense or going to a MEP 401k makes more sense. But simple IRAs, those are getting a boost in contribution limits as well, going from 14 grand up to 15,500. Your catch-up contribution going from 3 grand to 3,500. So big increase for you simple IRA contributors as well. Speaking of IRAs, if you contribute to an IRA, most likely contribute to a Roth IRA. Remember, those share the same limit, okay? So you can contribute to both IRA and Roth IRA, but you can't contribute collectively total in sum more than the maximum. You got to be aware of phase-outs as well. We'll hit that too since that's changing. But IRA contribution limits have been 6 grand for a long time. IRA, Roth IRA has been 6 grand for a long time. That's getting an increase as well. Not an enormous numerical increase, but the new contribution limit will be $6,500 for an IRA, for a Roth IRA for 2023. Your catch-up contribution has been $1,000. It's staying $1,000. So therefore, if you're age 50 or older, your IRA or Roth IRA contribution limit for 2023, $7,500. If you're younger than age 50, $6,500. Of course, you've got to have earned income. You've got to have enough earned income to cover that. If you have enough earned income, but your spouse doesn't, you can make a spousal contribution to theirs as well. But that contribution limit is increasing by $500. Possibly more substantial, A bigger change for IRA and Roth IRA account, contributors is the expansion of phase-out range. So even though your contribution limit didn't increase that much, the number of people that can contribute or would be eligible to contribute to these potentially increased significantly. So for IRA contributors, your phase-out range is now $73,000 to $83,000 if you're an individual filer, $116,000 to $136,000 for a married filing jointly. That's if you have a retirement plan available to you. If you don't have a retirement plan available to you, then it doesn't matter how much you make, you can deduct it, okay? But that is for individual, and then for your spouse, if you are eligible for a retirement plan at work, but your spouse is not, that second income threshold is for them. For Roth IRA, and I think this is more applicable, especially with the market being down, people are more prone to contribute to Roth IRAs than deductible IRAs. Single filers, your phase-out range is from 138 to 153. That's a big increase. That's almost a $10,000 increase. And same with married filing jointly. You can make up to $218,000 in 2023 and still contribute directly to a Roth IRA. I remember when those limits were around 180. They've been creeping up to 190. Now they're up to $218,000. The full phase out, if your income, adjusted gross income, is over $228,000 and you're trying to contribute to a Roth, you won't be able to do so even if you're married. And then lastly, my favorite tax credit, and yes, I'm a geek, so I can have favorite tax credits. It's the retirement savers credit, and this one is my favorite because it's a tax credit. It's a dollar for dollar benefit to you, not something you need to pay back, just for doing what you want to do anyway for your retirement plan, and that is saving up for your retirement. The retirement savers credit is a percentage of $2,000 that you contribute and your spouse contributes. It's 50%, 20%, 10% based on your income levels. And a lot of times people aren't eligible to receive any of this if your income is above a certain threshold. And those thresholds, that has expanded this year. You can see that on the screen here. So married filing jointly, you can have income up to $73,000 and still be eligible for the retirement savers credit. Heads of household, just under 55 grand, single, 36 grand, 36,500. So normally this is right at the beginning of your career, maybe at the end of your career, maybe in between jobs, something like that, where your income would be below these thresholds. But there again, make sure you're doing financial planning so that you can capture these tax credits that most people aren't eligible for, and you can get that tax benefit for doing what you want to do and what you should be doing anyway. So how's this impact your financial plan? I would ask two questions. One, does this impact your tax shelter strategy? Meaning, with these changed thresholds, phase-out thresholds, should you contribute to other or certain retirement accounts that maybe you weren't eligible for in the past? Maybe you should contribute to a Roth IRA even though in the past you weren't eligible. I've got some clients that I serve that each and every year we just look at the numbers and say, can you contribute? No. And for the past several years it's been, no, unfortunately you're not able to, you're phased out. Well, with these expanded limits, maybe you are. Maybe you are. So number one, does this change your tax shelter strategy? And then two, I think of, we've got this retirement readiness gap, or at least the statistics tell us we've got that. So do you find yourself maybe needing to play catch up on some retirement savings? And if so, these expanded limits should certainly help. Work with your certified financial planner, see how this influences your behavior. Should it change your overall strategy, your overall financial plan and retirement plan? If you don't have a CFP on your team that can help you with that, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us here as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.